2022. So to talk about this market, we're joined by Kay Hope, credit research analyst at Bank of America. Kay, thank you so much for joining us. I mean, the interesting thing with issuance is that we are expecting overall ESG debt issuance to increase, but what if some of the labels that have been green so far get reissued? Is that the biggest concern to this part of the market in 2022?
Our expectation is really for more green bonds, more social bonds, more sustainability bonds, and a lot of growth in sustainability-linked bonds and loans. The reason for that is different labels are offering different advantages for issuers. So social bonds have really created a space for supranationals, where green bonds have the broadest appeal. Sustainability-linked bonds and loans allow a company who may not have 100% of proceeds to use on green or social projects to use the proceeds as they wish, but still sort of plant their ESG flag and show their commitment to improving on given KPIs.
So, Kate, what new products, sustainability-linked loans or bonds, might actually leave investors a little bit more cautious so that they don't go into greenwashing, which is everyone's biggest scare?
I really think greenwashing as an overall theme is going to be big in 2022. Investors are looking more and more closely at ESG. They really want to understand how a company plans to use its proceeds, whether it's general corporate purposes or in the case of a green or social or sustainability bond, where all proceeds must be used for green or social projects. People really want to know what those projects are because one person's greenwashing may not match another's. And so we really expect people to be taking that ESG on board even more in 22 than what we saw last year.
And Kay, there's a part of the market which so far is unregulated, the ESG derivative and repo markets. Is that a product area that you'd be looking at that could go, grow more? And are there any risks associated with that development?
I think the repo and derivatives markets are also expected to grow. At the same time, they're also going to be coming under greater scrutiny, regulations or not. ESG scores also are not regulated, but there are increasing demands for scrutiny in those areas too.
Okay, how does ESG actually change the cost of capital overall?
This is something that's really interesting, and we've done some work on this, particularly on the fixed income side. And what we're seeing is everything from a small greenium or a pricing premium with things like green bonds, which can be a couple of basis points or up to 10, 15, 20 basis points in the high yield space. And that's because of greater demand for the label. But we also see changes in cost of capital creeping up in conventional bonds, which I think is really, really interesting. And we wrote a report on this late last year where we looked at things like oil and gas and tobacco, which are areas where our investors have told us they're more likely to reduce exposures over the next 3 years. And sort of reflecting that, especially in oil and gas, we've seen less issuance of 10 years or longer in the past 12 to 24 months. And we're also seeing that coupons have been pretty flat across oil and gas new deals in 2020 and 2021. And that's interesting because oil prices doubled in 2021. So you would think that the cash flows associated with that would make those coupons go down, where in fact that wasn't what we saw. And you see similar things in tobacco as well.
Yeah, and Kay, that really actually caught my attention, right? The fact that ESG is impacting some of the conventional bond spreads. And actually in your research, and I think you also point to the fact that, new issuance will be, higher, so more expensive.
New issuance of labeled bonds we do expect to continue to increase. So you're right, we had about $1 trillion equivalent last year across the 4 key labels. We do expect that to grow substantially in 2022, particularly as so far what we've seen globally is different parts of the world are using the different labels in slightly different ways, which may kind of cross-pollinate across regions to give investors in sectors ideas of doing something similar to what someone in Europe did or someone in Asia has done. So I think there's a lot of room to grow, and our U.S. Counterparts have not really gotten on board yet in terms of labeled issuance.
Kay, thanks so much. Kay Hope, our credit research analyst at Bank of America, joining us this morning to talk about ESG. Now, let's get straight